In today's video, we're going to be discussing the differences between an LLC and an S corporation. And we're going to be talking about how you can save on your taxes set up as an S corporation, but also a little thing that a lot of people don't talk about with S corporations and why they may be more advantageous has to do with funding and equity within your business. Now, taking a look at this screen right here, this is IncFile. If you're not familiar with that service, they can help you set up with an LLC or an S corporation. They also do nonprofit, C corporation entity structures, but they have a really cool S corporation tax calculator. One of the things, talking to a lot of different people interested in getting set up with a business, they think that there's some sort of tax advantage with getting set up with an LLC. There is not. It's simply about limiting your liability. Now, if we go down this post a little bit, and the link to this post will be in the description below. It is an affiliate link because if you end up getting set up with an LLC or an S Corp using my link, I will receive a commission, but it helps to support me to make more content like this, so I appreciate it. Now, one of the things though you want to be aware of is the ways that you can set up an S corporation. There are two ways to do it. One is forming an S corporation, which is what I did with my business, or you can form a limited liability company but elect to be taxed as an S corporation. We're not going to get into that in this video, but what you really want to take a look at is these two paragraphs right here. Basically, when you are an employee, a W-2 employee, and that's what most people are familiar with and used to, there is employment, payroll, and self-employment tax. When you are an employee of a company, there is a 15.3% employment tax, and that is usually split between you and the business. So you might be paying half of that as the employee, and the business is paying the other half. Then on top of that, you have your federal income tax. Now, that's 15.3% though. If you are a sole proprietor, you are now paying all of that. Now, if you're set up as an LLC and you make $100,000, that means that you're going to have over $15,000 in employment taxes because you are paying both sides of the house now. Now, for the federal income tax, no way to really get around that unless you want to start talking about moving to Puerto Rico or something like that. But we're not going to talk about that. That's a discussion for a different day. So this part of the page here really highlights the difference. When you pay as an LLC, you're essentially a salaried employee. It's a pass-through. You are paying 15.3% of that employment tax on all proceeds that you earn as a business owner. Now, if you're a sole proprietor, but you get set up as an S Corp or an S Corp designation, what you can do is you can split the way that your income is taxed. So some is going to come through as a W-2 salaried. So even if you're a sole proprietor like I am on the books. I am an employee of my business, even though I'm the only employee currently. I am partially paid through salary, and then I am partially paid through what's called a distribution. So the distribution is taxed differently than what a salary is taxed at. Okay, so this is where the fun part of this video is playing with this S Corp tax calculator. So what is your estimated yearly net income for the business? So let's say that the business is doing all right. We got $100,000 in net income, and on top of that, we're taking about an $80,000 salary each year. So that's going to leave $20,000 left over for a distribution. So what you can see is as a sole proprietor, it would be $14,581 that you'd pay in taxes. As a corporation, you're going to pay $12,240, which saves you $2,341 in taxes. And again, that is because the distribution that you're taking, that $20,000. So now let's lower this a little bit, and let's say that we're only going to take a $50,000 salary, and then you're going to take the remaining $50,000 of net proceeds as a distribution. So this is where you can really start to see things ramp up. So now you're going to be saving $6,931 a year on taxes. So there's where you can really start seeing the advantage of an S corporation over an LLC, is that you are going to save on taxes by paying yourself partly as a employee of the business, a salaried employee, and then partly as a distribution, and on that distribution is where you're going to see the savings. Now, the other thing that's a little bit less talked about with S corporations compared to an LLC, it's a lot easier to get funding on an S corporation. Now, the reason for that is if somebody wants to invest in your business, maybe it's venture capital or somebody who just wants to be an equity stakeholder in your business, it's a lot easier to set that up with an S corporation because you're going to have shares for the business. Right now, my particular business is an S corporation. I have 1,000 shares and I own all 1,000 shares of the business. If I want to bring somebody else on, I can actually bring them in and be a part equity owner in the business. And then when I do shareholder distributions, they actually would get a piece of that as well. I have no plans of doing that for my business because I like to keep things small and simple. But some of the things that you can also do with an S corporation as far as investing in your future, and this is the thing that really attracted me to it, is as a sole proprietor, if that's the case that you're in, you can still hire your spouse and bring them on as an employee. Now, on top of that, if you have a solo 401k, which is something that I set up through Vanguard, you can bring your spouse on, and if you pay them around like $20,000, $25,000 a year in salary, just enough to cover the taxes, you can max out their 401k at $19,500 as of 2021. So what I'm able to do is I can still keep my solo 401k. I'm still the sole owner of the business, but I can bring my spouse on. So then what you can do is you can decrease the taxable income of the business because my payroll expenses have gone up by bringing my wife on board, but then we're also just taking that money and putting it right into our 401k. So there's a lot of things that you can do set up as an S corporation that are very advantageous, especially for a sole proprietor such as myself. So again, if you want to take a further look, I suggest using the link in the description below to check out this tax calculator. And they have a lot of helpful resources here in the Learning Center as well if you're kind of looking into getting started with a business, or DIY guides, or what structure makes sense for you. And if you're interested in this video right here, this is a review of Gusto. This is how I set up my payroll for my S corporation. It is a frustration setting up an S corporation, but if your business is turning enough of a net profit, if you can save money every single year, I mean, that's an awesome thing. So again, guys, not a CPA, not an attorney, but this is just what I've learned through my journey, and I wanted to share it with you. And thank you again for using my link in the description below, and I'll catch you in the next video.